Hello everybody, welcome to this video about my top reasons to buy MicroStrategy, my top 3 reasons, which are no financial advice. They're just my reasons, they just apply to me. And in my view, in this entertainment-only video, I think if one were to buy MicroStrategy, first of all, you need conviction in Bitcoin as the asset. You need to believe, roughly that there is no second best. Is essentially what you need to believe. You need to believe into Bitcoin as the apex of all asset, the number one asset in the cryptocurrency space. That's a prereq. Once you believe that, then you come to the question, well, Bitcoin's great. What's better than great? What's better than Bitcoin? It's more Bitcoin. More Bitcoin is better than just simple Bitcoin. And this is, in my view, the main reason to buy, the main thesis to buy the common stock is that you're going to benefit from a Bitcoin yield. And Bitcoin yield is a concept that is, I guess, somewhat tough to understand on a first look. And I'm going to spend a little time to try to explain the Bitcoin yield. So Bitcoin yield is about the difference between buying Bitcoin outright and buying Bitcoin via MicroStrategy. If you buy Bitcoin outright, let's say you go on Coinbase, you buy Bitcoin on Coinbase, you're going to spend $98,000 on Coinbase, and you get 1 Bitcoin when you start on year 1, and at the end, on year 0, and at the end of year 1, you still have 1 Bitcoin, end of year 2, you still have 1 Bitcoin, end of year 3, you still have 1 Bitcoin, at the end of year 10, you still have 1 Bitcoin. 1 Bitcoin on year 1 equals 1 Bitcoin on year 10. That's buying Bitcoin outright. That's Bitcoin, the best asset, but not more Bitcoin. Now, what if you buy MicroStrategy? If you buy MicroStrategy, you spend $98,000 again today. And what do you get? You get MicroStrategy stock embedded in which there is 0.55 Bitcoin. And this is calculated with price to NAV. This is how much Bitcoin there is in 98,000 dollars of MicroStrategy shares. So if you spend 98K on MicroStrategy, you're going to get the equivalent at year 1 at the start of 0.55. Now let's assume the Bitcoin yield is 15% for 10 years. So after year 1, you go 0.6. After year 2, 0.69. After year 3, 0.79. Year 4, 0.91. Year 5, 1.05. So you broke even sometime towards the end of year 4. You have just recuperated your Bitcoin. And then if you keep going at a 15% Bitcoin yield for 10 years, you can see that your 1 Bitcoin turns into 2 Bitcoin. But actually, it's actually internally, it's a much greater return. Yes, you got a steep discount when you bought. You bought it at 0.55 Bitcoin. You bought MicroStrategy, got exposure to 0.55 Bitcoin, but he grew it almost 4 times. He grew it almost 4 times if he's able to generate a 15% Bitcoin yield for 10 years. An enterprise operating on the Bitcoin standard is better than just owning the Bitcoin. Just like a dollar, right? Let's say you love the dollar is good. What's better than the dollar? It's a company that is going to grow the dollar pie for you. That's better, right? That's not going to change under a Bitcoin standard. And what happens if you buy MicroStrategy stock and you assume they're going to do 25% Bitcoin yield every year for the next 10 years? Where in that case, you spend $98,000 on MicroStrategy stock. You get year 1 the equivalent of 0.55 BTC. You see year 5, 1.59 BTC. Year 10, 4.84 BTC, almost 5 BTC. So you would have bought the Bitcoin on Coinbase, you spend 98, you get 1 BTC, year 10 you have 1 BTC. You buy the Bitcoin on MicroStrategy, year 1 you get 0.55 BTC, year 10 you get almost 5 BTC if you assume they're able to achieve a Bitcoin yield consistently across the next few years, next 10 years, assume they can achieve a yield. This is why people buy it. They buy it for the yield. Top reason, they buy it for the yield. And you want to benefit from the Bitcoin yield, and that's the reason why you buy. And in order to benefit from a Bitcoin yield, you should not be following religion and dogma about dilution. You have to love dilution to buy MicroStrategy because dilution is accretive. This is what is very tough to a lot of understand, especially the smart ones. It's very tough for him to understand, and I guess the over end of a bell curve as well, right? As a famous theme shows, this is pretty tough to understand. But the example is this. The example is this. So I'm going to walk you through this example on Bitcoin yield. So example 1, you have no dilution in it. And we're going to assume a few things. We're going to assume that there's only 1,000 shares of MicroStrategy. You own 10 shares of MicroStrategy, so you own 1% of all of the shares of MicroStrategy. These shares, they are 33% Bitcoin. So that's equivalent to a price to NAV of 3. If you own 1% of 33% of the MSTR BTC bag, that's what you own. If you own 10 shares out of 1,000, you own 1% of the Bitcoin bag, 1%, and 33% of that 1% is the Bitcoin bag. So your bag is 33%, okay? That's without dilution, that's right now. Now, what if Saylor dilutes you? This is the important part to understand the Bitcoin yield. MicroStrategy now decides to dilute you. You get diluted. So what does that mean? That means it prints 10% more shares. MicroStrategy used to have 1,000 shares. Now it has 1,100 shares. You still own 10 shares. You got diluted. You still own 10 shares. So now your 10 shares, they were worth 1% of the MSTR outstanding stock. They are now worth 0.909% of the 0.909% of the outstanding shares. They are now worth 0.909% of 1,100 shares. You got diluted. You own less of the company. But what happened with those extra 100 shares that were issued? Well, they were entirely turned into Bitcoin. So a dilution of 10% yields 10%, but it doesn't yield 10% on the 33.3% BTC bag. It yields 10% on top of the outstanding shares. So that 10% is actually added, and it is 10%, quote unquote, 10% off the market cap, 10% of outstanding shares. So your Bitcoin bag, when it turns the extra 10% into Bitcoin, your Bitcoin bag turns from 33.3% to 43.33%. So now you have a company that has 1,100 shares and that is 43.33% Bitcoin. And in the past, you had a company that was 1,000 shares and that was 33.3 Bitcoin. So by diluting, you drop the NAV. In this case, the NAV dropped to something like a 2.3, right? And this is the situation now. Now you own 0.909% of 43.33% of the bag, right, of MSTR's bag. So in total, 1% of 33% in the without dilution scenario, you had 33.3. Now you have 39.39 by multiplying this by this. So he increases your net bag by diluting you. He's increased your bag by diluting you. And the question boils down to this: would you rather own 0.909% of 43.33 or 1% of 33.33? And the answer to that, obviously, is that 39.39 is higher than 33.33. So 0.909% times 43.33 is 39.39, which is higher than 1% times 33.33, which is 33.33. Or I could say it otherwise: the ownership stake that you had, it dropped by 9.1%, but the Bitcoin bag in what you own grew by 30%. So that means that you accreted the difference. The difference that you accreted was 20.9%, and that's for you. That difference is for you. So you grow the yield from 33 to 39. You grow your bag from 33 to 39, and you achieve that by being diluted. This is, in my view, the genius of dilution. For MicroStrategy, it doesn't follow any standards when you dilute to buy Bitcoin. You don't dilute to pay executives. You don't dilute to go after an acquisition. You dilute to buy Bitcoin. That is the playbook. And so that's one of the reasons, of course, you want to benefit from Bitcoin yield, and you understand the dilution. You also understand that MSTR is mostly a dilution story right now. Over 80% of the story is the ATM story, the at-the-market story, i.e. the issuance of brandly, newly minted shares. You just mint the new shares. You understand that the story is an I dilute for your own good story, mostly right now. But the rest of the story is a debt story. And that debt story, well, it's convertible debt, and of course, because Saylor issues that debt thinking that the stock will shoot up within the next 5 years, this debt is issued 4 years out, that debt will actually not be repaid. Most likely that debt will, well, I mean, unless the whole strategy fails, and then we have if Bitcoin fails, yeah, we're gonna want the money back, right? But if Bitcoin doesn't fail, then the stock should go up, and if the stock goes up, that means that this convertible debt will be simply converted into shares. And so the only difference between debt and ATM is that the debt is dilution in the future, quite simply, and the ATM is dilution today. But the mechanism, the underlying mechanism of a yield is the same, and of course you get that with a convertible debt. The added bonus of a convertible debt is that you get a premium from the call option embedded in the debt, and that premium MicroStrategy earns it in two forms. One form that they earn it is ridiculously low interest rates, and they're soon to be negative, in my view. I mean, that's my expectation, as I highlighted in my last MicroStrategy video. That's one thing, ridiculously low interest rates. That's one way you earn that premium for giving a call option to the market in the convert. But another thing that you earn is more favorable conversion prices. And so Saylor has a choice. He could have a lower conversion price, or he could have lower interest rates, or he could have a mix of both. He's been doing a mix of both, but these are the two main ways that you can get your premium on selling that call option on yourself. And so that's what you need to understand from the Bitcoin yield standpoint. And you may want to own MicroStrategy and buy MicroStrategy also because you believe in the Bitcoin yield story of the Bitcoin banking of the future. There is a beyond 2030 story. Right. Once everybody does this playbook, once we transition to a hard asset that companies use in their balance sheet throughout the economy, that yield via arbitrage between the ATM and the price to NAV, this arbitrage will be tougher to be done in the future. It will be tough. So over time, I think, and that's what a lot of people believe, this will turn into a Bitcoin banking story. What's a Bitcoin banking story? Well, once generating the yield through that dilution doesn't work anymore for bonds anymore, how are you going to generate the yield? I think that's a 2030 story. How could he do it? Simple way. He's done this before. It's you borrow money against your Bitcoin to buy more Bitcoin. You put up your Bitcoin as a collateral with some bank, Gemini, Coinbase, whatever, and then you borrow more Bitcoin against your Bitcoin. The most straightforward here. That's the way you can earn a yield. And then there's less straightforward stuff. So let me briefly walk you through. These are just ideas of what you can do right now. There's a longer list. There's more. So one thing is you can do is you can issue Bitcoin-backed instruments of all sorts. And we knew about the preferred. That's going to be one thing. Regular bonds. That's going to be another thing. So that's going to be another way to earn a yield. Then you can land the Bitcoin itself, and you can land the Bitcoin, for example, with a multi-sig retaining one of the keys. But you could, and this is heresy for Bitcoin maxis. But you could also just give the keys, not lose, quote unquote, right? But you could also lend the Bitcoin by giving up the keys. And MicroStrategy, in my view, would only do that to nation states or too big to fail banks. It would be too risky to do this for like a really good company. That'd be a really bad idea to do this for that, in my view. But if you do it for a nation state, or if you do it to a too big to fail bank, I believe the risk is greatly reduced. Now, if you were to do this for actually entrepreneurship, for example, you would need to do this at exorbitant interest rates. What I mean is like 30 or 40% to justify the risk of not having the keys anymore. And so lending the Bitcoin probably would be done mostly through multi-sig if it's, say, a company. And if the interest rate is super high, or if you're lending to a nation state, you could also give up the keys, and it would all depend on how you secure that stuff, right? You can secure lending the Bitcoin with other assets on a blockchain, for example. Anyways, this will be possible in the future, in my view, lending the Bitcoin. Then another simple way you can do it is that you can list the Bitcoin in a wrapped token on other L1 blockchains. For example, you can have your Bitcoin and you can list it on Ethereum, you can list it on Solana, and you earn fees from people who want to own Bitcoin on Solana or Ethereum. You could also mint stable coins, so you could use your Bitcoin as a collateral to mint these stable coins, and these stable coins get into the economy, get into the system, and you earn a yield in the form of transaction fees on these stable coins. Right? What else could you do? You could list pairs, right? And so some people call these liquidity provider tokens, but you could create a pair. And in the case of MicroStrategy, I have no doubt that pair would be USD BTC. You could create a USD BTC pair and list it on various decentralized exchanges and earn yield on the pair and on people trading the pair. You could also lend your Bitcoin to TradFi. This is a similar thing, right? You can just just like lending your shares. If you lend your shares, sometimes you get a few pennies on your stock. You can do the same thing. You could lend your Bitcoin to TradFi, and TradFi maybe wants to short BTC. If TradFi will do what TradFi does. Maybe they want to borrow your Bitcoin to short it. And you could also list your Bitcoin by seeding a layer 2, like the Lightning Network. You could just list the Bitcoin on the Lightning Network and yet again earn the fees, the transaction fees on the Bitcoin moving. These are just a few ways that I think MicroStrategy will be able to earn a yield on a huge Bitcoin bag, let's say in 2030 and beyond. And that's a reason to buy the stock. That's another reason for the yield. That's another reason why people buy it. All right, more quickly now. So if you don't own MicroStrategy for the Bitcoin yield, why else would you own MicroStrategy? Well, there is a big reason why a lot of people own MicroStrategy, but I could say they own SMCI. I could say they own Nvidia. I could say they own Tesla for the same reasons. They own these highly volatile, highly desirable, high volume stocks. They own them for what? To write call options against these shares. And of course, you still have to believe in Bitcoin if you're writing call options. You don't necessarily have to believe in Bitcoin if you do more advanced strategies, but at least if you write call options, you want the stock. And you want the worst case scenario to be the stock going up on your and your stock being called. That's what you want. I still believe, for people who are very bullish on the stock like I am, that this is playing with fire, because you could lose your shares if you do that. But some folks don't mind losing their shares, because you lose your shares to the upside in the case of writing call options. You don't lose your shares to the downside. The bad news, in the example, I'll go for example in a second, but the bad news of writing an option and losing your shares, the bad news is you making 60% or 80% or 100% on your money. That's the bad news. It's capped upside. Oh, the stock went up 200%. Well, boom, you were capped at 100, so you only made 100. But some people don't have a problem capping their upside in exchange for income now. And the best example of that, of course, is retirees. Retirees want income now. They don't have a problem capping the upside to get that income. And of course, the higher your strike price, the lower your premium, but also the lower your risk. So what you do, and what a lot of people do, is they own MicroStrategy. So you can understand why the stock is trading at a premium, because they want to own, say, 1,000 shares of MicroStrategy so that they can write calls. They can sell covered calls, right? So what happens if you sell short-term covered calls against 100 shares of MicroStrategy? Let me show you an example that I saw today in my broker. So right now, MicroStrategy is worth about $340, so you need $34,000. That's 100 shares. And today, what can you do? Today, you can sell a call against your shares for a strike price of $550. The stock is at $330. You can sell a call for a strike price of $550. And if you do that, you earn a premium of $220. So let's say you had $340,000 in MicroStrategy. Well, you could earn $2,200 in premium on that alone. And of course, you can do that every month, because that's a January 21 contract. You would do the same come January 31, come February 1, you do the same thing for February and for March, etc., etc. You can do this every month. In this example of a 550 strike price, the yield is 13% a year. which is much better than whatever you can get in a savings account. And so, and you still have, by the way, if you do that, you still have a 60% upside if your shares are called. Some people love that scenario. And then you have people who take much higher risk too, who will sell call options that sell at, say, 450. Well, if you sell a call option at 450, your premium is going to be much higher than this. But you really run a risk, because 450, we were close. We were there not too long ago, were we? Right? So essentially, you run a risk, and it's up to the people selling the covered call to decide how much risk they want to take. In the case of MicroStrategy and the explosive growth of MSTR and Bitcoin, that's not a risk I would be willing to take. But for a retiree, this looks very good, right? For a retiree, this looks very good. You earn a 13% yield, and the worst case scenario is you lose your shares, but you make 60% in my case if you lose your shares. So that's why this stock trades at a premium, because people want to own it to write call options on it. And that's why a lot of these volatile stocks trade at a premium, because they want to write the options on that. And that's another reason why some people own the stock. The third and final reason I want to talk about today, top reason why some own the stocks, is that there is an extraneous reason as to why you would want to own the stock over Bitcoin. There's tax reasons. For example, there's still many countries in Europe, I can think of one especially, where there's still no Bitcoin ETFs. No Bitcoin ETFs. So if there's no Bitcoin ETFs in your country, well, it's tough to access Bitcoin that way, but you can access MicroStrategy Stock. And you may say, oh, well, why would I want MicroStrategy Stock? Why wouldn't I just buy crypto outright? Well, here's the key. Many countries, and again, this is my European perspective on this, even though I live in the US, but my European perspective on this is that, because I've seen it in France, I've seen it in other EU countries, is the uncertainty surrounding the tax treatment of cryptocurrency and Bitcoin. And often in Senate, Congress of these countries, you'll see a politician, typically well on the left, who says, oh, we need to tax crypto at 60 or 70%. And you get very little pushback when that happens, because obviously it's the new thing, nobody cares. And so there's a fear of the tax treatment of crypto, because it's still a nascent asset. And that fear is not there for stock. Taxing stock, the doctrine on stock taxation has been well established in every single country, and it's roughly stable in every single country. A lot of people see crypto as a way to get a money grab in a tax standpoint, and be like, hey, I want to raise some money, but I don't really want to make my citizens too upset, because I look at the wrong data and I think my citizens don't like crypto, and so I'm going to levy such taxes. Uncertain tax treatment for crypto is still a reason why people want to own the stock as opposed to owning the Bitcoin outright. And they also want to own the stock because they may not have access to an ETF. And the final reason, somewhat related to that, not exactly, but somewhat related to that, I could have made a separate point about this one, but it's the need for TradFi rails. If you need TradFi rails, for example, if you have a brokerage account and you need to increase your margin, you want to have your margin. Owning MicroStrategy in that situation, especially if you live in a country that has no ETFs, because, of course, the Bitcoin ETF also adds to your margin, but if you live in a country that doesn't have access to a Bitcoin ETF and you want to own a stock and you still want to increase your margin and work on your margin, well, in that situation, in that case, owning MicroStrategy is a way to go, and borrowing against your MicroStrategy shares. So you need it on TradFi rails because you have a TradFi bank, etc. That's a bonus reason as to why. So these are the three main reasons, three top reasons in my view why people buy MicroStrategy. The biggest reason is the yield. The second biggest reason is earning money, earning income on writing call options, covered calls. And the third reason is special tax situations, special country uncertainties. These, in my view, are the 3 reasons why people buy MicroStrategy beyond the simple and unconditional belief in the underlying asset. There is no second best. The Bitcoin crypto asset, right? Which is you have to believe that as a prerequisite to even look into MicroStrategy. You have to love Bitcoin. And of course, as always, this is no financial advice. This is not investment advice. This is just entertainment. Please like, please subscribe, follow me on X, follow me on Patreon, comment, like. I appreciate the support. Thank you very much for watching and have a wonderful, wonderful day.